so much awesomeness already that you guys can see, covering the spectrums of so many things in life. And the value doesn't stop there. We're going to keep going because we want to add as much as we can, covering life and business and your health, all those fantastic things. Our next guy up's another great friend of mine. We've done business together. We've got several things that we do together, something called Brew Beard, which is where we go in and we help existing coffee shops with consultation and coaching. And we also have a branding that we offer that. And you'll see why we call it Brew, like blue, but Brew Beard here in just a moment when you meet this awesome gentleman. Mitch Cammidge, a good friend of mine, a client of mine, but we learn from each other. He's what they call Canada's top business strategist, and he really does it well. His acumen speaks for himself. Over 200 super successful entrepreneurs that he loves and he helps be ultimately successful. He's a mentor to hundreds, multi-speaker event, been at Harvard, taught all those guys out there, so many great things. He's a husband, a father, driven to have a global impact all around the world, has helped tons of people through the crisis of the pandemic. Really, it's just as anything that he says, he can make it simple. He is one of our leaders in Undisputed Mastery. And he said, Mitch says, I want the whole world to learn how to cash flow their business and see how simple it is to win. Just like Greg said, if you're not making money in a business, you're really not in business. You've got to make sure that you are in the business, right? And in order to do that, you have to cash flow. Cold, hard cash. That's different than profits. Mitch is going to talk about it. His topic is cold, hard cash, how to cash flow your business. Business success is about one simple thing, cash flowing. If you're not cash flowing, it's not successful. A business must be profitable. If your business is not cash flowing, it's simply a money losing hobby. There's a difference between profit and cash flow. Mitch is going to teach us his very simple way of doing that. You on here, brother Mitch? Awesome. Wonderful, bro.
Right here.
How you doing?
Good. How you doing? This
Man,
is a fantastic day.
You brought all of Canada with you. Good to see you, brother. Is it still snowing up?
No, it's nice out. In fact, I'm jealous. One, all the education we're sucking up here for free, but two, there's a whole bunch of people that have clearly decided. I've been watching them pop in and pop out all day going, you bastards, you're sitting on a patio somewhere drinking something in the warm weather because it's just nice enough now for us to get out in the backyard. And so I put something, sunny up at least on the back end of my green screen here. So
I love it,
when I stare at my monitors, at least I think I'm close enough to the windows to get some outside light.
Beautiful, man. Well, it's so good to have you here, man. Thank you for being willing to share. You are a rock star. I love it when we work together, and I love everything that I see. You are savage in business. That's right, man. Take her away, brother.
You got it, Brother Keith. Thank you so much. And everybody on here, welcome to those that are going to see this in the future. I don't want this to be boring. I want this to be exciting. And I love the fact that I followed up right on top of Greg because he said some notable things and his curve, different labels, same outcome as well. Businesses go through a series of humps, a series of peaks, a little bit of plateaus, and then inevitably fall off a cliff on the other side. And a few things that always speak to it universally. One of them is cash flow. Secondly, what we heard part of Greg and his team talking about had to do with people. And that emotional intelligence is deeply important for leaders and managers. And then, of course, sales and marketing is there. So if you don't have the Holy Trinity, good sales and marketing, good people, and good cash flow, your business is going to get the crap beat out of it continuously. So you're all here right now, and I'm going to get you to slow down a little bit. Ron, thank you so much for doing that for us as well. Breathe a little bit. Why? Because money is frightening. Money is scary as hell. And it's one of the things that we will continue to hide from when it comes to our business on a regular basis. We'll hide from what's going on with the money. How do we know? Who here? Now pick this up. Wherever it's sitting right now, pick this thing up right now. Go ahead. It's okay. Now, if you're watching me, you don't have to pick it up, but it's there. It's within hand's reach. So, and I need some interactive. Rod's popping it right up in front of his camera. I need some interaction for a second. Who here can take this thing right now and in the next 30 seconds, look at how much cash they have personally? In other words, log into their bank app. Should be able to do that pretty quickly, right? Next 30 seconds, heck, next 15 seconds. And because mine is, yes, I've catered to the corporate evil empire or whatever it is, thanks to face recognition. And I know our IT professional is going to absolutely cringe at that. I can probably get into my banking information in the next 7 seconds if I unlock my phone and open up my banking app, because it's going to snap a picture of my face. Now, using the same thing, who in the next 30 seconds get access to their business cash flow? In other words, look at what's going on with their business finances while on there. Okay. So personal, question 1, can you get to there in the next 30 seconds? Question 2, can you get to it for your business? Question 3, can you get to it for both in the same place? We hide from our money on a regular basis. And we just heard Greatest Team talking about, of course, emotional intelligence and being able to invest the right way. And we've listened to pressure and dealing with threats and stuff like that. Money is not the enemy, but money is your blood, very much like the blood that's pumping through your body. So I'm going to need you, and you can hold it up if you want to. I need you to have one of these and one of these. And by the way, I'm writing reams of it. And no, it doesn't have to be the same pen as what I've got here or the same book as what I've got here. You're going to need both of these because I have to give you some foundational information first. So I'm going to need you to jot some notes. In fact, what I want you to do is I want you to take your pen right now, and I want you to draw a big grid in the middle of the page. Just want you to draw. You can make it an X, you can make it a cross, whatever you need to do. I want you to turn the page sideways as well, because you're going to fill in these 4 quadrants really quick for your business, okay? In the top one out here, you're going to write cash flow. You can write it big letters, you can write little letters, you can write in the top corner, you can write it in the middle, you can write it right here on the line. I don't care what. I want you to write the word cash flow in there right now, okay? And then when we're there as well, because you got cash flow sitting here right now, cash flow, and you can write it around it. You can write it in lines if you're more organized. Heck, if you're an engineer, whatever it is, you can put it on grid paper and make it really meticulous, really exact. But where it says cash flow, you're going to write 3 little letters somewhere together. COH stands for cash on hand. And somewhere else in there, right, you're going to write CIB, cash incoming to business. And somewhere else in this quadrant, you're going to put just 2 little letters, a P and a P. Well, Greg and his team were just on here, and they know that P and that P, if you got anything to do with human capital or human resources, is people, right? And then somewhere else in this space as well, now that you put that little P and P for people, you're going to write EXP, expenses, and next to it, above and below each other, you're going to put a little F and a little V. The little F stands for fixed. The little V stands for variable. And then somewhere else in here in this, just this one box, you're going to write 3 little letters, NET, net. Now, cash flow for your business, and when it comes to this thing, or whether it comes to a piece of paper, or whether it comes to another piece of paper, or whether it comes to another piece of paper, or, well, I won't hold that one up, but when it comes to another piece of paper, doesn't matter what it is, our ability to cash flow and figure out whether our business is going to thrive or survive can fill in just a quarter of a page, and it's something that you can do in the next 30 seconds, minute, 2 minutes of your time. So whenever I deal with people, and of course, as the savage in business, I'm actually a business coach by trade proclivity. I work with business owners, big and little, all over the place. And Keith got it, for some reason, Keith got the old copy of my biography. So I'll just say that I've worked with 364 successful business owners in the last little while. So that's my best radio voice for you on a Saturday afternoon. But for all of them, everything that we do in business is something that you can use here, okay? There are spreadsheets, there are forms, there are apps, there's accounting software, there's all sorts of stuff like that. But everything you're doing, and what I want to talk to you about today really quick is this. Why? Because if you can't use this and you can't use this to make sense of most of the stuff that goes on in your business, then brothers and sisters, I got to tell you, you're doing something wrong. Now, the last thing I'm going to say here before I get you into cash flowing on your business. Now, who here would agree that if you've got more cash in your business could survive longer? Those people that are on camera, you can just show me your hand. The more cash you got, the longer your business will survive. Self-facing, right? The less pressure and stress you've got in your head, the more likely you are to make better decisions in your business that's going to survive longer, right? Good employees in your business that you can, and for a lot of business owners that I talk to, they're like, I really wish I had somebody so that I could go on vacation. I could go on vacation for a week and this thing wouldn't ring, and they just take care of stuff. Who agrees that would be there? And of course, if my sales cycle wasn't so violent doing this, I'd do a hell of a lot better in business. Well, guess what? Whether it is Fortune 500 companies, whether it's businesses that have billions of dollars in gross revenue to calculate, or whether it's just one person trying to make sure that they can pay their mortgage payment, cash flow and being able to effectively measure your cash flow on a regular basis is something that must work all the time, 24 hours a day, 7 days a week. And it's a thing that you have to have access to that information within seconds or minutes so that you can make informed decisions. Now, I deliberately accelerate and I wave my hands around a whole bunch and get jumped up, and Ron's going, man, this guy's blood pressure's going through the roof. Yeah, because I'm passionate about this. This isn't something that makes me miserable, because I know exactly how much money I've got at any given time. So I know what I can do with my business based on how much of this I've got available. So you have to do this. Now, here's the litmus test. And again, I'll hold this bad boy up for a second. The phone that's inside of this case right now, the company that represents, in 2014 had enough cash on hand to buy their next 6 biggest competitors in cash. Now, that phone is an Apple. Apple could buy Samsung for cash and the next 5 companies in line behind them in 2014. Right? Why? Because cash is king. Now, when you got this grid here, so we got cash flow in one of the corners, right? In the next corner, I want you to write the word dashboard. Dashboards are a measurement. There are tools. Now, the cash flow segment is the physical cash and how we're going to measure it. Dashboard is all the stuff we need for the financial health of our business. So in dashboard, you're going to write the word cash because that's your cash flow tool. You're going to write the words regular reporting. In other words, how frequently do I have access to the financial information and the cash flow information of my business? You have to make a decision how often you need to be able to look at this stuff so you know whether you're doing well, you're holding your own, or you're dropping down that curve that Greg was showing us. And then the third word you have to put in that dashboard segment is strategic plan or strat plan. Where's my business sitting at now? Where is it going to go to? If I don't have at least some framework, some plan, some idea, a couple of numbers, some notes, or something incredibly complex, wonderful, and beautiful to behold, somewhere to say, if I'm here now and I want to go to here in 6 months, a year, 2 years, whatever it is, I'm never going to get there. I don't know if I'm meeting or exceeding what it's going to take to get my business to the place that it wants to be at. Now, on the next box down, so if you put cash flow in the top corner, one box, and dashboard in the second one, with the words cash, regular reporting, and strat plan in that one, that bottom left box now put financial structure. Financial structure are the things that make up part of your dashboard and your cash flow. The documents that you're going to need, the kind of reporting that you're going to need. Again, that's going to go into the dashboard for reporting. What regularly makes for healthy businesses. So sales reporting, part of your cash flow. Your actual financial reports, your income statements and balance sheets. Your actual cash reporting statement. And again, we're going to come back to talking about our cash flow reporting in a moment. What do we want and how often do we need that information to come into us? Your business profit design. 3 fancy words to say, how is my business set up to make money? I work with, and because my business is located in Alberta, which is like Texas in the north for all the American people that are on the audience here. Business profit design means, well, if I charge enough money today to make my mortgage payment next week, I'm good. Okay. When did you account for the roof over your head? When did you account for the utilities? When did you account for the gas in your truck? When did you account for the acetylene that went into the welding rig in the back of the truck? When did you go into the benefit plan and stuff like that? Nah, there's enough money. Business profit design means that you look at everything to do with the business and work backwards to where, how much am I going to charge right now to do something? And then, of course, what is the price? And more importantly, what is the value of something that I'm providing? And that last quadrant is the goal setting one. Now you're going, Mitch, some of this stuff overlaps in these 4 different quadrants. Well, in the goal setting one, once again, to go into the strategic plan and the dashboard, where are we at? Where are we going to? What are we going to measure? Does this business have to exit? Do I want it to continue? Inside of that goal setting, what is my regular goal set? How much money should I have in 30 days? How much money am I going to have in 90 days? How much money am I going to have in a year? Right? Where's my business going to sit financially from a health perspective? What is the big scary goal I'm working towards? Is it just enough to get by? Does your business need to accelerate and grow? Do you want to be a millionaire? Well, here's some quick stats. Businesses that do $1 million plus in revenue in a single year are in the top 1% globally. People that make $1 million a year are in the top 1/16th. There's a difference between those two. Businesses that revenue 10 million plus are in the top 164th. Where's your business going to? Is your business a 1% business? It doesn't have to be. But not being able to set that ahead of time or not having as part of your measurable goal means you can't put in a strategic plan. If you don't put in a strategic plan, you can't put measurable steps to build your business up to it. And then, of course, what is your result? What's the whole umbrella? What's going to happen over here? Now, all this is essential when we look at just our cash. So cash flowing, we're going to come back to that first quadrant and those 5 simple details: cash on hand, cash incoming to the business, your people, your expenses, and your net, because that helps to put numbers in perspective in all these other areas. But if you write this down in just 4 areas like this, and you've got cash flow, you've got dashboard, you got the financial structure, the stuff that you need, and goal setting, in other words, your measurables that you can put on each of these others, then you're going to have a fundamental picture of business now and business later to measure against. And therefore, every day or every week or whenever you're going to, and I'm going to give you a rule of thumb to work with when it comes to cash flow in a moment, then what you're measuring means you're building towards what you want and you need. Why is dashboard, goal setting, and financial structure so important when I'm just measuring, okay, Mitch, I got, I don't know, $1,000, $5,000, $50,000, $100,000 in my account? Cool. And I think I'm going to make X amount of money. When your business gets really busy, you need to know ahead of time, if you've got enough money as it gets busier, whether you can hire. When you're going to hire, you know whether or not you're going to be able to afford the next person that comes in. When that person comes in, especially if they're going to fulfill a marketing or a sales role, are they going to be good enough or be able to fulfill enough of the business when you shrink your cash to pay for them right now? When do they have to break even? When are they going to become profitable? When are they going to make more money for your business? These all become part and parcel of just me measuring how much money I got right now, how much I think I'm going to make in the next 7 days. The moment I have to pay a human being, I need to know when I have to pay them. I need to know how much I have to pay them. When I got to pay for things in my business, that's what the expense portion is. So for us, our cash flow really gives us these measurables against everything else. And without going down into it, if you want to have some really good reading on this, you know, a great proponent, information that I use an awful lot, I always go back to it as one of those trough places. Keith Cunningham, great guy to read. Read Keys to the Vault. It's going to be a wonderful treatise on being able to understand a little more about what's going on with the cash and the financial structure of your business. There are many others that are there, but Keith Cunningham just puts a really good perspective on it. So there is good information to take away right now, other than just what Mitch has to say to you. So now let's come back to that one quadrant, cash flow, right? Cash on hand, cash incoming to business, people, expenses, and net. All this other stuff, if I got a little bit of time left, and Keith, you'll let me know what my clock looks like, please. I'm going to focus on this area for a moment. Cash flow. It's simple. The next 5 to 10 days, you're going to have to measure your cash flow at least once. Preferably, when I work with my clients, you just say, listen, every week you're going to need 5 or 10 minutes to set aside so that you can make a really informed decision about what's going on in your business. So when you're there, I need you to pick up this thing, I need you to pick up this thing, and I need you to pick up this thing. And I want you to write down a couple of things. First of all, how much money do you have right now? Cash on hand, that very first feature. How much money do you have in your business bank account? How much money do you have in your personal bank account? How much money do you have in operating lines, lines of credit, business credit cards, etc.? How much do you have available right now? If you scraped it all together in one place, doesn't matter where it came from, what kind of pile would it make on the table or on the floor or in the room or whatever it is? Would it fill this? Would it fill this? Would it fill the entire space of my desk? And I got this great big beautiful desk. A lot of money could pile on top of this thing. It's not covered in money, but a lot of money could pile on top of it. So if I could scrape it all together, I went to the bank, pulled it all out, how much do I have right now? Cash on hand. How much money do I have to work with at the moment? Next feature I need to know, and that's our second one, that little C, that I, and that B, or a great big CIB if you put it in there, cash incoming into business. Depending on the kind of business that you've got and financial reporting that you've got, how much business do you expect to come in this week? If you've got a business that has regular invoicing, you're a service-based business, et cetera, you got contract work, then you got contracts that pay maybe in certain terms, in certain places and businesses. Maybe everybody pays you on the first of the month. Maybe they pay you throughout the month. If you've got a retail or a brick and mortar business, then based on past performance, how many customers do you think are going to come in this week? In other words, how much money am I going to add to that pile? I've got, I don't know, let's say cash on hand, $1,000. For quick example, I want you to take this and I want you to go cash on hand, COH, $1,000. And then the line below it, I want you to put a C and an I and a B. And why I don't have a fancy document up here is I want you to write this in your own handwriting because it's going to stick better for your brain. The next line down, I want you to put a C, an I, and a B. That's cash incoming. Cash incoming to business. Okay, big boy, I got to start with $1,000 this week. And this week, I think I'm going to bring in $1,000. So next to the C and an I and the B, I'm going to put $1,000. So I got $1,000. I think I'm going to make $1,000 this week. And then the next line down, I'm going to put those two little letters, that P and that capital P right next to each other to stand for people. So people, when do I have to pay my people? Including me. In little businesses, we often forego thinking about ourselves as a regular line item expense for payroll. And for most businesses, little business owners will kind of take money when it's there. In fact, we started early on, it's just us. We'll take money whenever it's there. I got some money right now, it's mine. Next time it shows up, I got some money, it's mine. I got some money, it's mine. But as businesses evolve and grow, and as you got employees, even if you got one other employee, 2 employees, 5 employees, 50 employees, 100 employees, now you need to know how many employees do I have, how much money do I need, and when do I have to pay it? So in our example here right now, we got cash on hand, $1,000. Cash incoming to business, $1,000. People, I've got one person, myself. That person needs $500, and they need $500 on Friday. Today's Saturday. By next Friday, I got to pay me $500. I know it's not an awful lot of money, but follow along for the case of the example. Then I go to my fourth detail piece of information, expenses, that little EXP. Now, expenses in business, and why it's notable. For most people, if you look at regular financial reporting, in other words, your income statement or your revenue statement every month, and that's the one that says revenue, that's how much money it all comes into the business. Cost of goods, what it costs for your business to actually do business. Expenses, how much the business has to spend just to keep its lights on and the doors open, whether you make any money. And then there's that net profit figure at the bottom. It's either positive or negative on a month-to-month basis. Maybe your bookkeeper does it. Maybe you handle it yourself. Maybe your accountant takes care of it. Heck, maybe you only see that thing one time a year. And as a business coach, I'm going to say, holy crap, you got to fix that because you need that information faster. But expenses, interestingly enough, occur all the time. So our expenses, we need to know on a week-to-week basis, if we're going to do, let's say, our cash flow right today on Saturday, what fixed expenses I have this week. Now, fixed expenses are the ones that we regularly pay. I pay for, and my office is in my home, so I regularly make a mortgage payment. I regularly make a home insurance payment. I regularly pay utilities. I regularly pay my cell phone bill. I regularly make a car payment, et cetera, et cetera, et cetera. These are fixed expenses. So what expenses do I have coming up this week? Why? I have to account for them because I have to have enough money to be able to pay them. And then variable expenses are those that occur because business happens or as one-offs or individuals. Fixed expenses are those things that even if it's one time a year, you pay your insurance for your car just one time a year instead of monthly, still fixed expense. You know, it shows up like, I don't know, the 12th of March every year. You're going to make your car insurance payment. So if it's the 12th of March, you better know that you need $1,000 for your car insurance payment, right? Shouldn't be a surprise. So on a weekly basis, how much do I think I'm going to spend on my business? And the fixed expenses are the one that chances are going to take up the most of your money. And of course, there are no surprises. You know when they're coming, so you know how much money you're going to have. And then that last figure is the sum of the addition and subtraction out of those. So if I've got this hypothetical scenario, cash on hand, I've started with $1,000. Cash incoming to business, I've got $1,000. I think it's going to come in. People, I'm going to pay one person, me, $500 by Friday. That's $500 that I'm going to take out of the business at some point. And expenses, fixed and variable. Fixed expenses, well, this week I have to fork out $1,000, and that's going to be office rent, utilities, and cell phone bill. Variable, I don't know, I think I'm going to spend another $100. So if I have to by Friday pay $500 for me, people, and in expenses, I have to fork out $1,000 for fixed expenses and another $100, I think, in variable expenses, because that's what I spend about on a week-to-week basis. Then this week, I've started with $1,000 cash on hand. I think I'm going to add $1,000 cash incoming to business. By Friday, I have to pay $500 to me, and I'm going to fork out $1,100 in expenses, $1,100 in expenses. So this week, what I should do is I have $1,000. I'm going to find $1,000. I'm going to fork out $1,600. At the end of the week, I should have $400 net. Now, as I go through the week, I get to Friday when I pay myself and I paid all my other expenses and I paid my $1,000 in fixed expenses. Do I have $400 left over? If I don't, what did I miss? If I have more, did I forget to pay something? Did I make more money than expected? Were my bills less than I thought they were? That means that I have to go back through, and now I've got an accountability structure. I get to the end of the week, I want to review that very quickly. Where am I? Am I at the $400 I expected? Do I have more than that? Do I have less? If I have less, what did I spend where and why? Now that number so in this hypothetical example, I get to Friday, I'm going to give myself $500. I paid $1,100 in expenses, fixed and variable. I have $400 left over. Oh, it's Friday. I made another week. I got just $400 left in the bank account. But you know what? Expensive week, did really good. Caught that $1,000 that I'm supposed to. Fantastic. Way to go. Whew. Going into the weekend. Good to go. Monday morning, I wake up. What do? Take my pen, take my piece of paper. I write down COH, CIB, PP, EXP, F, V, and then, of course, net, how much I got left over. Sit down Monday morning, open up my app on my phone and go, how much money do I have? $400. Cool, that's what I left last week with. Awesome. Now I'm starting the week knowing that I got $400 in there. How much do I think that I'm going to have come in this week? Coming into business, cash incoming to business. How much do I think of it I've come in right now? I think it's going to be like $1,000. Okay, cool. Do I have to pay people this week? Nah, I don't have to. That's going to be a zero. Expenses. What do I have this week? Fixed expenses. Actually, I have $200 in fixed expenses. Okay, variable expenses. I think I'm going to spend another $100. At the end of the week, what do I have? Didn't pay anybody. Smaller fixed expenses, about $100 in variable expenses. Started with $400. Think I'm going to make $1,000. Did I get to Friday, close a business, and have what I thought I was going to? Now, for a moment, some people here, and often when I talk about cash flow, people are like, Mitch, I'm a far smarter business owner than this. This is absolute bullshit. Why am I doing this? I got an accountant. I got a bookkeeper. I look at my financials on a regular basis. Why the hell am I going to bother listening to this crap? And I'm not going to take the time to write this stuff down. This is ridiculous. Okay. You got me. It's ridiculous. You're this big, successful business owner, et cetera, et cetera. I had a client once, and the year that I worked with them, and I just worked with them for about 12 months. In fact, I worked with them for 12 months and 2 weeks. They started the year with almost $33 million in reoccurring contracts on a monthly basis. In fact, in that year, and this is how volatile the year was, in that whole year, that 12 months and 2 weeks, we did $332 million in revenue that year. When we started that year, and it was about the second week or third week of January, I'd have to go back and look at my notes for a moment. They had 800 employees. By the third week of February, they had 82. Because in the intervening time, 5 weeks from when we started working to there, that was the beginning of, in Alberta, what was a downturn in oil and gas, industrial manufacturing. All their contracts went slam shut. In 5 weeks, and I've never seen an HR director look this harried in my entire life, they downsized by 90% of their employees. Well, they just finished their corporate year end, which happened to follow a calendar year, which means December was their shut off for the end of their year. And their corporate taxation had to be paid by the end of February. And then the owners, there were only 3 partners in this business of 800 employees. In fact, their management team was a total of 5 people running 800. So that was a problem we needed to fix too. They had to pay their personal taxation. When you downsize from 800 employees to 80, you know what happens in a human resource capacity? You make mistakes. When you make mistakes, the labor board comes unglued and you start to pay more money. They forked out an atrocious pile of money to make it right with employees that they didn't let go the right way. Their cash disappeared fast. But they had just finished off closing out their year end, and the year told them just the year before, they did $262 million in revenue. Their cash flow in the middle of March, kind of cash flow I have in my 3-person consulting firm. It was minuscule. It took us 3 months to right that ship. And then weirdly, inside of that 3 months, a lot of those contracts, what happened is they ended up being shelved. They picked up, and then they went through hyperinflation over a 7-month period, rehired about 80% of their employees, and ended up having to add about another 20% on top of what their former staffing was before. So cash flow is a desperately important function inside a business, whether you're big, whether you're itty bitty bitty, 3 people like my company is. Why? Because I need to know how much money I got right now. And I'm going to have a pretty good idea what's going on in my business if this week, $33 million in reoccurring contracts slam shut. And I go, crap. I know I got corporate taxes coming. I know I got to downsize people. I know I got to pay myself. I know I'm going to have a personal tax burden to pay. Does this sound like something that's more of a cash flow problem than a financial problem in the business? Hell yeah, because I need a whole bunch of money in one place at once in a very, very short period of time. In fact, 5 weeks, to have to reduce, eliminate, or make up for all of these other things. The average employee, and I'm going to talk about just my marketplace for a second, why it's important to cash flow. The average employee is protected under labor law here. And if somebody files a complaint with the labor board in Alberta, the labor board is what's called employee centered, meaning that whether right or wrong, whether I quit, whether I'm stealing everything under the sun from the business, and you have me red-handed and you fire my ass and threaten to call the cops, I file a complaint to the labor board. Labor board calls you first and said, yo, why'd you terminate this guy? You can't do that. Screw you. And now I, as the business owner, have to prove that it was rightful for me to kick your butt out of the business. Because otherwise, they're going to crawl up inside of me and use me like a hand puppet. So for us in business, when it comes to that client doing $360 million in contract work for 12 months, guess what happened when you fire 700 employees? We had about 600 labor complaints. All of those cost money. So it became a financial exercise to a cash flow exercise back to a financial exercise in about 3.5 months. So for us, it became really simple. When we were squeezed, when that business was constrained and when its cash flow was screwed, what do we have now? What can we leverage? Where can we find it? How much do we think is going to come in? What do we have to pay? And when we can't pay something, how do we start to negotiate with vendors, lending partners, etc., and get them to help us make sense of this so that we can navigate a really difficult, really tough, really squeezed financial time? That happens because you're reporting and looking at your cash flow on a regular basis. You're looking at physically how much money you've got, what kind of decisions you can make for business, and after that, what you're going to have left over. So when I work with business owners, when they're big and little, and again, my client base ranges from one person starting out to dozens or hundreds of employees, it is always the same thing all the time. And it's to take one piece of paper and draw it down the middle. Why? Because it's really elemental. How much money do I have right now? What do I think or what do I know is going to be coming in this week? When do I have to pay my people? What do I have to pay in the form of expenses this week? And you know, at the end, if somebody wants to ask, I'll answer it right now preemptively. Mitch, how do you manage your own stuff internally? It's really simple. I've got this cool financial app called Google Calendar. And in Google Calendar, every bill I've got to pay on a reoccurring basis is in there with the amount that I pay. And so any given week, when the new week ticks over, and Mitch, what do you got to find for money for your business? It's in a bright green. It's in neon green. I can't even miss it. I had 2 car payments for my wife and I on Thursday and Friday this past week. My home equity line of payment. So my home bill, it happens today. So that's not going to come out of the bank until Monday, right? I had a bill for a business financing that I had earlier in the week here, happened on Wednesday. The amount that I have to pay was in there as well. I had 5 bills I had to pay this week. When I rolled in Monday morning and cracked open my computer, there was no surprises for Mitch to go, shit, I got to pay that, and I got to pay that, and I got to pay that, and I got to pay that. By the way, on Sunday, tomorrow, even though they don't take money out of your bank on Sundays, they just let it pile up until Monday morning. I know I've got another bill, and on Monday, I already know that I've got a bill that I got to pay there too. So Mitch had to make sure all that money was in the bank. So this week, while I've got clients and me, I've got clients that pay all over the place in the month. They pay based on contract start date, which means if you start in the middle of a month, like on the 12th of the month, your invoice is for the 12th of the month. I'm getting paid money on the 12th of the month. I've actually got somebody that if they haven't paid me today, as soon as I'm done talking, I'm like, hey, what's going on? Where's my money? Right? Where's my money? Because I got a home equity line of credit payment to make. Give me my money. So we always start there with the most essential portion of what we need in our business, because it is the lifeblood. It is 100% the lifeblood and part of your nervous system in your business. And if you don't have regular cash flow accounting, you're not getting the right nerve impulses. You can't map what your body's telling you to do. If you don't have money in your business, you don't have enough blood going anywhere. You know, Ron brought up the fact that Lance Armstrong, and whether you think he was clean or whether he cheated or he admitted to whatever it was later on is irrelevant. The guy used to park his own blood in a freezer and pump it back in. Why? It gave him more to work with. It gave him more blood, more oxygen. The body doesn't go, whoa, that's too much. Can't get it in there. It's like, no, we'll make it fit. It's cool. Same thing with cash. Well, you know, and I got to quote Mr. Burns from The Simpsons here for a moment, right? And I think it was Bart talking, Mr. Burns, you're like the richest guy I know. You're way richer than Lenny or da, 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 right? He goes, oh, I know, but I trade it all for a little more. I had a friend of mine once say to a buddy of his, he goes, if I had your money, I'd burn mine. And he goes, no, if you had my money, you'd put it on top of yours. He's like, actually, that's far smarter. Yeah, why would I burn mine? Exactly. We all want just a little more. So if we're going to get to a little more, we have to measure it every week, because now you can start to goal set. So if we start this hypothetical agenda where I got $1,000 and I find $1,000 and I got to pay me $500 and I need $1,100 for bills, that's $1,600 going to come out of $2,000, $400 left over. Well, that's less now than what I started the week. Guess what I got to do? I got to get my ass in gear. I got my hustle on, because now cash flow is telling you what you got to do for sales. Cash flow this week and next week and the week after. If I know that next week I'm going to have a bunch of bills piling up, that means that this week I better find more money, even if I don't need it this week. Because why? I don't want to get into next week and have to hustle my ass for even more money. If I end this week with $400, I'm going to start next week, and I know that I'm going to have another $1,600 in bills, but I'm starting my week with $400 instead of $1,000. Guess what? I have to go find $1,200, so 20% more money than I did last week, just to come to zero. Not even stay ahead. If you get this right, cash flow and regular cash flow in your business, in other words, being able to stay positive by even $1 more than you think you need, long-term is a proven predicator, and it makes your business bulletproof. If in a little business you can sell every day or find the mechanic for your business to sell every day, long-term your business is bulletproof. If you market effectively enough in your business long-term, where marketing starts to take over for having to sell every day, your business becomes bulletproof. And if when you add people to your business, you know that those two little P's in the people category for cash flow measure every week, you add good people, which means that for small business owners, you realize you can actually take a vacation and spend some of that money you hope you held on to at the end of a week, and they're not going to phone you every day, or they're not going to rob you blind while they're doing the job for you. That is another proven indicator. If you can have positive cash flow and measure that regularly and have some goal setting to work with, you can additively and then finally geometrically and from a quantum effect start to increase your sales and get marketing to help support that, and then ultimately take over for that, and then add really good people to business. Those are the predicators of success, which means your business will last indefinitely. It becomes bulletproof. It will work no matter what is going on. And cash flow is the lifeblood, and it is the way that the nervous system impulses in your business transmit back and forth. And if you don't have cash, you are screwed. You've got it. You can make decisions. You can grow what you've got, and your business will survive, thrive, and grow. And nothing feels better than having enough money to know that you can pay your bills and not have to worry about it. And if that doesn't help you sleep better, other than Ron's breathing techniques, I got nothing else for you, because that's what, for 364 clients of mine, has worked every time. Keith, thank you for giving me the format to preach from the pulpit about the importance of cash money.
Let's hear it from Mitch. Way to go, brother. Yes. Way to go. Thank you so much, guys. Cash flow, just like you mentioned, it really is king. And a part of the reason why some businesses make it and some businesses don't, Mitch, I know, I'm talking to the choir here. It's because people don't want to do this work. They don't want to think in these terms of numbers. But, how do you know how to play a game if you don't know what the score is? Cash flow is that score, and it's different than any other thing. Mitch, let me ask you, brother, you guys have questions. If you have questions about his quadrant system or anything, please let us know. Go ahead and send those questions in now. Let me ask you first. When it comes to the idea of cash flow, how do you recommend that people begin to just understand that? I mean, what you just said was great, but how can we better understand the cash flowing of our own business and what the difference is between that and, let's just say, what we typically call profit?
Yeah, and that's interesting. Why I mentioned Keith Cunningham before. I mean, he puts it fairly succinctly. It's the same thing I educate on. It's not new. What I'm talking about here is not new under the sun. When we look at our business, there's three parts that go into it. There's our balance sheet, which is like our stuff, right? Assets, liability, equity, all that sort of crap goes together, and one has to equal the other two adding up. People look at that every year and go, oh yeah, they nod and smile and go, that's great. Well, your balance sheet is really more like your credit report for your business. The better your balance sheet is, the more likely your business is going to be able to borrow, right? Your income statement, revenue, cost of goods, expenses, is the roadmap for success in business. It tells you where you come from, where you're going to, and whether the business is trending up or down. It helps you to make more informed business decisions. Cash flow, though, that portion of it, why it's so vital and important, what's quite a bit different, is that your net profit on your business and how much cash you have in your business itself are actually very disconnected. So an awful lot of business owners I talked to, and early on they get into trouble, and one was a construction company. I remember having this discussion as well, and this is the best way to illustrate the point, Keith. We just finished up a really good financial year. We'd grown by about 40%, 45%, or whatever it was. And that was modest because he needed to be able to still have positive control over it. And he was moving off the tools. So it was a guy that liked to work with his hands, had about 4 or 5 employees. And at the end of the year, about 12 or 15 employees working in the field. But he had to get off the tools to do that. So I remember his accountant called me first and said, this is what we just did. I'm just finishing up the years. It's going to be fantastic. We're calling it awesome. And it's about 45 minutes, then my phone rings, and I see that it's this business owner. And I answer, I'm like, hey, what's up? You got to be pretty happy. He goes, yeah, I'm pretty happy. He told me that we did about 2.5 million in business this year. We're profitable to just about 20 points. He's telling me that we got about 400,000 in net profit for the year. That's fantastic. He goes, Mitch, I got a problem. And what's that? I got to meet payroll next week, and I got some expenses. I got some material expenses stuff. Cool. I got negative $112,000 in my business account right now. Excuse me? I got negative $112,000 in my business account right now. My accountant's telling me that's a $500,000 swing from how profitable his business is supposed to be and how much cash he doesn't have. Now, this was a good learning lesson for me at the time, because at the time, I didn't educate financially on cash flow as well as I do now. In fact, this was very early in my career as a business coach. And so it was a failing on my part, but as well, it was something that really showed there's a huge discrepancy. And when you look at, I'll go back to that balance sheet for a moment. Balance sheet's got assets, all your stuff, right? It's got cash, and it's got the desk that I'm writing on. It's got my computer. It's even got this pen list in there and all the stuff my business owns over there. Your cash lives there, okay, on your balance sheet. But your net profit lives in a different place on that balance sheet. And your net profit, and there's a ratio as an example. I don't know, let's say your business did $10,000 this month and your net profit was $1,000. There's actually a formula or a ratio based on the kind of business industry you're in that shows you from that $1,000 in net profit, how much of that should actually be cash in your business. Why? That net profit may be, you still got accounts payable. You've got long-term debts to pay. People owe you money, your accounts receivable. In other words, you have outstanding invoicing or bills to be paid from people that have done business with you, but you haven't collected the cash yet. So you made $10,000 this month. You got $1,000 left over according to your income statement, but you only have $200 in the bank. You're like, what the hell? I should have $1,000. No, because your income reporting, your net profit in your business is only subjectively related to the amount of cash you have. So for a business owner to understand it means that you got to take a blank piece of paper or a spreadsheet. And I mean, there's great apps out there to use as well. And if you're using accounting software, you can get your accounting software, QuickBooks, Xero, Sage Accounting, stuff like that, to give you some of this information and even dashboard it. And for QuickBooks, like mine, for example, right across the top, what's the first thing I see when I log in? All of my bank balances for everything. You know, there's 2 different accounts in my business. I got an operating line of credit. I got my business credit card, other stuff like that. And then there's my personal banking information, other stuff like that, all rattled across the top. So as soon as I log into my accounting software, the first thing I see is how much cash I've got. You know, I got a little dashboard built in, a custom one that just shows how much money I've got. And then I've got that itemization. Remember I said I got the coolest, you know, expense accounting system in the world, Google Calendar, right? So between Google Calendar and what shows up in my QuickBooks dashboard shows me when I got bills coming out, what stuff I've got outstanding. My accounts payable shows up right there. So Mitch, this is the crap you got to pay in the next 30 days. And here's the stuff you got to pay in the next 7. So immediately, as soon as I log into my accounting software, yes, it still has a box that shows me profit and loss. Here's your net profit for the year. Here's your net profit for the last 30 days. Here's what expenses you paid so far. If you want to run your report and look at your last year, your last quarter, your last month, you can do that sort of crap as well and have a sense of what's going on. But right at the top, first thing that shows up, how much money I've got and how much I have to pay in the next week and how much I have to pay in the next 30 days. Those are very different features. So for an awful lot of businesses, the more established they get, the busier they get. Those business owners are going to spend a lot of time looking at their income statement, revenue, cost of goods, expenses, and net profit. And they start to lose track of how much cash they need. You know, a good recent example for me, not a failure, but just a reminder to a business owner. I have a business owner right now whose payroll biweekly is higher than his gross monthly revenue was when we started working together 3 years ago. So he pays more every 2 weeks for his people expense than he made money 3 years ago. And so that means the amount of cash he's got to have in the bank is higher than all of the money he made previously 3 years ago. Sometimes he goes, Mitch, this is scary. Yeah, it's scary, right? That's a big damn number to find all the time. But you know what? Because he looks at the money he's got, what's coming and getting paid. And honestly, his internal system is cool. He's got his accountant and his bookkeeper. He's got an executive assistant that handles all of his invoicing, does all the automated reminders. And then he's actually got a staff member who's tasked every week looking at his accounts receivable list and going, who owes us money right now? Who made a promise to us? And what are we supposed to collect on? And then he gives them a number and says, get me to this number this week or we are screwed. And what do?
People to help is really big with that. That's fantastic. It is.
Yeah, they spend 5 days a week going, I got to get to $150,000 this week. How much do I have in my accounts receivable? How much money do we have outstanding? Cool. And what do? They start making phone calls, text messages, emails, updated and automated messaging system. Hey, we're here right now. What's going on? An internal system as well that I advocated for them is you send an invoice through QuickBooks. You send a separate email as a reminder. You make a phone call to say, hey, did you get this? Cool. Remember, you got to pay me by Friday or we're screwed. We can't do work for you anymore.
Yeah. Looking at those scoreboards, looking at those numbers, making sure you do that every single week, man. It's so important. Guys, thank you. Let's thank Mitch. Way to go, brother.
Thank you,
yes, man. So good. Just fantastic, man. I love it. Thank you, Mitch. And this is going to be available on video that we'll have available on YouTube. Every segment here, every presenter will put up. It's 100% free. And I'll send out an email that you'll get an email blast. And I'll have the links. And so all the great stuff that Mitch was just talking about, you'll be able to go back through, read, take notes so that you can apply it yourself. It's easy to get lost in the weeds of all of that good stuff he was just saying, but I cannot emphasize how important it is to make sure your business is cash flowing, because cash flow is key. Really good. Well, guys, thank you so much. My wonderful wife, Adrienne, is now going to present. Oh, no, wait a minute. No, she's not. No. Come on, Adrienne. Step on up.
Come on, Adrienne.
Yeah. She wasn't prepared, but that's okay. No, just kidding. Guys, thank you so much for being here and sharing your time with us. We count that as an awesome privilege. It really is. And my hope and my goal is that you guys take this information and make your lives better. Again, like what we said at the beginning, it's up to you to create this vision of what your life wants to be. And it can be whatever you want, but you have to do it on purpose. That's the idea. You've got to get up and you've got to work, read, do, ask questions. And I'm here to serve you. And I know all of our wonderful speakers that were here today, they were here because they want to serve as well. They've got all that knowledge and all that expertise and all that desire, that willingness to share. And so, guys, if you don't follow up, that's on you. My ask of you is to take this information when you get the email and the videos on there. Don't keep it that to yourself. Share it. We want to put this into as many people's hands as possible. Why? Because we care. We want them to know that they can grow and better their lives. Any questions you have, you can reach out to me. You're getting emails from me. If you're here, just email me back. We'll make sure you get the information that you want. Ron has shared some wonderful PDFs about the breathing work. Greg is going to share some great inventory stuff. If you have questions about Mitch and how to cash flow your business, he's willing to share, whether it's the threat stuff that you got, cyber security. Brian is a great guy that you can consult with. And of course, Tuhan Harley, the stuff about the threat assessments at the beginning, man, you can't go wrong, considering that in your life. And then Coach Kirby at the very beginning, you can always reach out to him. Just look up Nathan Kirby or Coach Kirby, Rock City MMA. It's a fantastic thing. Guys, it's been my privilege being here with you. God bless you. I would just ask that you guys make sure that you continue it and pass it forward. Thank you. God bless you. Have a great day.
Thank you, Keith.
Thank you, Keith.
Yeah, thank you, Keith.
Adrian.
Fantastic.
Thanks, Adrienne.
Thank you.
We're going to
Great
talk
day.
next time, Adrienne. Bye, guys. Take care. God bless.